Hello guys, it's Max here from Daily Market Movements. Today it is the 24th of October, which means it is a Sunday, my favorite time of the week, because that means we are on the cusp of a brand new trading week. We have the full 5 days ahead of us, and as always, I'm going to be doing a video today analyzing the gold, Nasdaq100, S&P 500, crude oil, and last but not least, the Euro-US dollar markets as we go into this new trading week. On Friday, of course, I posted that video where I concluded last week's movements. We had a very good week last week, especially in the signal team. We made a significant amount of profit, but very excited to go into this new week. Just before I start today's video, I just want to say a massive welcome to everyone who joined our signal service over the past couple of days since that video on Friday where I showed you how you can all sign up. If you are interested in that service, then you can head over to our website, dailymarketmovements.com. I've left the link in the description of this video. That will take you to our website where you can then look up more about what service we actually offer here. And long story short, I just basically share all of my trades via a WhatsApp group. But before we get in today's video, I just want to make it clear to you all that everything you are about to hear on this video is not financial advice. It's just simply me sharing my own opinion with you guys and sharing my trades. And if you choose to copy that, then fantastic, that's up to you. But I would highly recommend that you do your own due diligence beforehand. So let's start with the gold markets. Of course, on Friday, we had an extremely volatile day here in the gold over the US dollar markets. I've been mentioning over the past couple of weeks now how important it is that we break above this 200-day EMA. If we break above that 200-day EMA and we have that daily close above it, it's very simple. We go straight towards 1830. That is a very significant level here in the gold markets because it represents the B zone, the top of the B zone of this ABC correction that we've been trading within for the past couple of months. And, if we can break above that 1830 area, I think that sends us straight to the next fib level, which is up at 1873. And if we break above there, we're going to go and test the top of that, the A zone on that ABC correction. So personally speaking, I think once we clear this B zone, we go straight towards 1920. But one thing that does worry me here on the gold markets in the short term is that we didn't get that daily close. A lot of traders would have lost a significant amount of money here. That's why I didn't send a signal out on the signal team, and I didn't open a trade myself here in the gold markets because we didn't get that daily close. Many traders would have been, they would have seen the gold markets trading at the highs here up at 1813. They would have thought, yes, it's broken, and added a very large position here in the gold markets, thinking that we could go to 1830 and then eventually 1875 and potentially all the way up at 1920. And then what happened? Well, in the final couple of hours of the trading session on Friday, we snapped back and we got that daily close below the 200-day EMA. So that resistance has held. It's been a false breakout during the trading session, but the daily close was below the 200-day EMA, and that is very important heading in to the new trading week. So I want to cover both sides here. I've just covered what would happen if we did get our daily close above the 200-day EMA. Once again, we would go likely towards that 1830 area, and then once we break above there, I think that sends us pretty much towards 1920, but you may have some resistance at the next fib level, which is at the 1874. But on the flip side, I'm going to cover the downside now. If we do get rejected here at the 200-day EMA, then I think that we would go and test the 50-day EMA. That's where we should find some support, which is currently at 1779. If we broke below there, then the good news is that we have that fib zone, that 23% fib zone, which currently sits at 1771. So again, that should offer some support. But if we broke below that level, which has happened in the past, as you can see on this chart pattern here, then I think we're likely to go down towards 1750. And if we broke below there, I think we go to the swing lows. And if we take out the swing lows, I think we then go and hit my longer term target here in the gold markets. I've been saying this for the past couple of weeks, my longer term price target for the gold markets, and when I say longer term, I mean 6 to 12 months. I think eventually we go to hit 1700 and then 1680, and once we break it below 1680, that could send us all the way down to 1500, where we bounced back in mid-March 2020. So that's how I'm playing the gold markets. Obviously, I'm going to have I'm going to keep a close eye on it when we open later on this evening to see whether we do get any price movement back above that 200-day EMA. So I would definitely keep an eye on that. 200-day EMA is the most important thing that you should be focusing on if you are a gold trader. Moving over to the Nasdaq 100. Nasdaq 100, we saw a very small dip here on Friday. I was saying during Friday's video that I was very, very happy with how the Nasdaq 100 has performed. I'm just going to quickly briefly go over it. For those who are new to my channel, I did cherry pick the bottom here on this uptrend line that we've been trading in for Nasdaq 100 over the past couple of months. Well, I say couple months, probably last 6 to 12 months, in fact, dating all the way back to November 2020. So over 12 months. Apologies for that. But I cherry picked the bottom here. I bought risking a maximum of 4.35% with my stop loss below the 200-day EMA, and I was targeting towards the all-time highs, which we have not yet hit. But the good news is that we are pretty much 75% of the way there to hitting my take profit price. So myself and the Signal team are making a significant amount of money here. I've been, I've been receiving loads of messages from my YouTube viewers and subscribers thanking me for that tip. So it's lovely to hear that my viewers are following my trades here and making some money alongside me. So well done to everyone. And going into this week, what do I anticipate? Well, personally, I do anticipate a test back towards those all-time highs. We've seen it over in the S&P 500, which I'm going to cover in a minute. But the S&P 500 is trading back at those all-time highs, and I think it's only a matter of time until the Nasdaq 100 goes and targets those all-time highs up at that 15,700 level. It's earnings season. We have some of the big FANG stocks reporting their numbers this week, and especially next week, the likes of Apple, Facebook, Google, and I do anticipate some significant beats here for the FANG stocks. But one thing that I would warn traders about is that, typically speaking, the expectations are incredibly high going into their earnings, and many traders, they get confused about this. They'll buy ahead of the earnings, and then typically speaking, these stocks can pull back 5 to maybe 10%. Amazon's a fantastic example. It always smashes its earnings expectations, but then the next day you typically see in that stock of a 5 to 7% pullback, and people are just like, whoa, why is this happening? And that's because these stocks do have a very good run up going into their earnings. So as I just mentioned, this week and next week we have a majority of the FANG stocks reporting earnings, and hence that's why I'm anticipating a good run up before they do report earnings. So it's kind of buy the news. It's kind of like buy the news, sell the fact way that it kind of plays out. So I think going into next week, we will see a nice run up here in the Nasdaq 100. And then, of course, once these stocks do start to report earnings, that's where I'm going to kind of maybe look to take profits and just wait for that pullback, which I can then take advantage of. Moving over to the S&P 500. Now, as I just mentioned over on the Nasdaq 100, the S&P 500 has hit its all-time high up at 4,536. In fact, last week we did create a brand new all-time high, which was up at 4,540. So very positive, and that's why I think the Nasdaq 100 will follow its path. I made a fantastic trade here. I bought on the 50-day EMA when we got that daily close, where we broke above the 50-day EMA with a take profit up at the all-time high. And of course, last week we went and hit that take profit price. So again, congratulations to all my viewers, subscribers, and Signal followers. We made some fantastic trades here over in the S&P 500. And this week, I'm looking to see whether we can go and create some brand new all-time highs. I think 4,600 is my short-term target. That's the top of this green box that I've put on the graph over here. One thing I would point out is the RSI is at 64, so we still have space to run towards the upside. We are not yet considered to be overbought in this market. Moving over to the crude oil markets. Crude oil had a fantastic day on Friday. We saw that push one leg high up towards $84 a barrel. This is something that I had been warning you guys about. I do have a price target up at $85 a barrel for crude oil short term. I think medium to longer term, we go to 90, then maybe 100. I know that some big banks up on Wall Street have got price targets above $100. I think one big Wall Street giant has a price target for crude oil markets up at $130 a barrel. And that wouldn't surprise me. You're seeing energy prices globally spike to record highs. So who's to say that crude oil can't follow its footsteps? But very, very good here for the crude oil markets that move up towards $84. One thing that I would warn you all about, though, is that on the RSI, we are considered to be overbought. We've had this fantastic run all the way from the 23rd of August 2021, where we broke above that 50-day EMA. And from there, we have just seen north. We've just been rising day after day with the occasional pullback. But then look what happens after we do have that pullback. We snap straight back and we, you can clearly see that traders have just come in and bought that dip. So that's very positive for the crude oil markets. But as I just mentioned, the RSI is indicating that we are overbought. And yes, I know it can be a bit difficult during times like this. You know, you can look at this graph and it just looks like the market keeps going up and up and up, but unfortunately markets don't just go up and up and up. You can just have to zoom out to understand this. And you know, if you're new to trading, new to investing, please be very, very cautious when you're buying at these high levels, especially when the RSI is above 70, because we will likely get that pullback in the foreseeable future, for short-term future. And you know, that would then offer a fantastic opportunity to then go ahead and buy this bullish market, the crude oil market that is on those dips. You know, it's all about taking advantage of those dips and not buying at the all-time highs. As the old saying goes, buy low, sell high. So, you know, that's my price prediction here for the crude oil markets. I'm going to be waiting for that pullback, perhaps down towards the 50-day EMA. You know, I'm sure I'll get some viewers here thinking, Max, you're crazy. Crude oil isn't going to go back down towards $76, but we've seen it here. You know, we've had that fantastic bull run. And then, of course, on the RSI, look where we were. We were trading up at 75. Where are we trading now? We're trading at 75. And what happened? We had that pullback. And in fact, we broke below that 50-day EMA to eventually go and test that 200-day EMA. So if that was to happen here, and by the way, we are the same level of overbought on the RSI, well, then we could see a break below the 50-day EMA. And we could see prices trading around that range of $68 a barrel. And, you know, believe me, a lot of retail traders would have lost money if that, well, would lose money if that was to happen. So please be cautious if you are new to trading. Use the RSI. You can find it in your indicator section here on most you know, most exchanges or most platforms. So very handy indeed. Moving over to the Euro US dollar, Euro had a very quiet week last week. We pretty much traded sideways, currently at 1.1650. I'm bullish here for the Euro US dollar. In fact, I opened a buy position on that weakness that occurred on Thursday. We saw that big red candle towards the downside. I took advantage of it, and I'm currently trading in a small amount of profit. I think I bought down at 1.1630. I sent that signal out to the WhatsApp group here for my signal followers, and you know, many of you are trading in profit, but of course it's still very early on, and I am targeting up towards that 50-day EMA, which is currently at 1.70. So going to keep an eye out for the Euro US dollar as we go into this new trading week to see whether we can go and touch my take profit. Those who've been watching my channel for some time, you will know that I am incredibly bullish on the Euro US dollar, medium to longer term. I think the Federal Reserve has murdered the US dollar this year. You know, we've seen all these massive stimulus packages, you know, worth trillions and trillions of dollars to kind of restart the American economy. And of course, printing money damages the demand for that currency. And with the US dollar being the global currency, I am nervous with what's to come in the upcoming years. But you know, for now, I am very bullish on the Euro US dollar, and I think this is a fantastic dip to buy. Once we break above that 50-day EMA, I'm looking for that move up towards a 200-day EMA. But on the flip side, if we didn't get that break above the 50-day EMA and we turned around, then I think it'd be very likely that we'd go and test 1.15, which is the next fib level towards the downside. I'm going to wrap it up there for today's video. That's you know, what I'm anticipating going into the new trading week. Those are the price movements and the price action that I'm looking out for. If you would like to follow me more in depth, then please head over to my website. I left the website link in the description of this video, as I mentioned at the start of this video. That will send you to my website. Charge a very small fee of £249 for a year's membership. You know, that's just one good trade, guys, and you can pay that membership off. Again, a massive welcome to everyone who joined our group over the weekend. We had such a large number of you join again, and I'm really, really happy with how my YouTube channel has been growing over the past couple of weeks, and of course the Signal team. So I hope you all have a fantastic weekend. End to your weekend, and I will tune in with you all on Wednesday, where I'll just do that midweek cap and you know, just basically see where the markets have gone from now until Wednesday. And then of course on Friday I will post another video concluding this week's market movements. Thank you guys, keep safe, and if you haven't yet subscribed to my channel, then I'd really appreciate it if you could do so.